Welcome back. 90 points on the Nifty. 19,822 is where we are at. The India-UK FTA is expected to happen this time around. The expectation is that we will soon see something by the end of the month getting signed. There are also reports which say that India perhaps will have limited benefits, as many exports to UK already enjoy low or zero tariffs. Let's actually discuss this in some detail. Jayant Dasgupta is former ambassador of India to the World Trade Organization. Vinod Giri is Director General, Confederation of Indian Alcoholic Beverage Companies. Gentlemen, great to have both of you here. Thank you very much for your time. Ambassador Dasgupta, if I can start with you, sir. First of all, if you've been tracking this closely, do you think we will get this done this time around? Because there were some thorny, contentious issues. The last time around, this came close to fruition as well. If you've looked at the relationship between India and UK, trade relations between India and UK closely, do you believe that benefits to Indian companies are going to be limited as is being speculated? Or you think this can be a meaningful booster if the FTA indeed is signed?
You've raised a lot of very important issues. The first one is about concluding the FTA negotiations this time around. And I think the chances are very bright indeed, because out of 26 chapters, in more than 20, I think the negotiations have been concluded. So there are only a few niggling issues left. And of course, there are these 2-3 major things which have to be tied up, which are basically about the movement of skilled professionals, for which India has been making certain demands. On the other side is about the alcoholic beverages segment, which I'm sure my fellow panelists will have more to speak on. And the third one is about cars, automobiles, and a few other items in which the UK is greatly interested. The last issue is about financial services, in which the UK is asking for greater access, and of course the investment treaty.
Sorry, Mr. Dasgupta,
yes.
So 20 out of 26 there is agreement, but is it possible in terms of how these things usually happen? If they can't agree on everything, could it be a limited kind of an FTA? Leaving some of these issues out, or usually it is all or nothing?
Right at the beginning or midway through the negotiations, I think that is the right time to decide whether it would be a limited scope FTA and the rest of the chapters will get concluded at another juncture. But in this case, it has been decided that everything should be negotiated together, and it should be a comprehensive agreement. So I think the chances are very bright that we will see a conclusion of the FTA within this year. As far as the benefits are concerned, if you look at merchandise trade, India exported about $11 billion worth of products to the UK last year. And of that, $6 billion, petroleum products, diamonds, machinery items, aeroplanes, wooden furniture, etc., they already enjoy zero duty access to the UK. And about $5 billion worth, which are apparel, leather items, etc., they have certain duties. For yarn and fabrics, it is just 4%. But for finished products in textiles like clothing items, it ranges between 10 and 12%. So with the conclusion of this FTA, hopefully we will get zero duty access for all textile products spanning from yarn to finished clothing items. And so for leather items as well, carpets, etc. So it should provide benefits in that segment for about $5 billion.
Got it. So you're saying that the textile sector, the leather sector are sectors that would be big beneficiaries of it. So just to understand, a lot of the non-traditional sectors, whether it's petroleum products, diamonds, machinery, pharma, that have been big exporters in the recent years, they're already enjoying zero duty, right? So,
That's right.
by and large, apart from the sectors that you mentioned, which is textiles and to some degree maybe even leather, there's not much of a positive impact. Is that the right way to read it?
In the case of merchandise goods, there would be benefits, but it would not be across the board because, as I mentioned, more than 50% of the products are trade is already enjoying zero duty access to UK. But
Right.
for the rest of the products, like labor-intensive products like textiles, leather, carpet, etc., we will gain.
Okay, let me get Mr. Vinod Giri in as well. Mr. Giri, on the alcoholic beverages side, what is the situation as of now in terms of what are the terms of trade between India and UK? If you can explain the context and then tell us what would an FTA mean?
So the domestic industry generally has been in support of the FTA from the beginning, but there are basically three expectations that we have. First of all, it should create a level playing field. Number two, there should not be opportunities or windows for misuse of the FTA concessions. And third is that it should be both ways. It should be a two-way street. So that's why for the first, we recommended duty reduction from 150% to 100% now, and then bring it down over 10 years' time to about 50%. Secondly, that's why we say 50%, because that's a kind of difference
Mr.
in the
Giri,
cost of production.
Yeah.
We have
Mr. Giri, sorry.
Scotland.
Mr. Giri, if you can first tell us what are the duties as of now? And,
So as of now,
are we big exporters? Are we big importers? I'm assuming we're big importers, right? But yeah, go on.
We are massive importers. We hardly export anything to UK.
Correct.
First of all, the balance of trade is, some say, 95%, 5%, or even more than that.
Okay.
Between UK
and what are the duties right now?
So we have 150% is a flat duty across total duty, which is customs duty as well as the AIBC, across all alcoholic beverages coming in. So that's our starting point. And plus we have all the duties in the states, which are different matter altogether, which are very high, of course. So this we have suggested to bring it down from 150% to 100% immediately, and thereafter over 10 years' time to 50%, so that we have 5% reduction every year. 50%, we say there should be the resting rate after 10 years, because as we see today, the difference in the cost of production between UK and India is about that much.
Yeah,
So
Mr. Giri, when you said a two-way street, right, we don't export very much. What is the level playing field then?
Yeah. So here is the big catch is there. Currently, the British laws prohibit, or they define whiskey as a spirit which is matured minimum for 3 years' time. Now, we have two problems with that. First of all, it of course pushes up the cost significantly, because in India, we have something called angel share, which is the evaporation loss when the whiskey is being matured. Now, that is, in India, is about 10 to 15% every year because of the climatic conditions. Whereas in Scotland, it would be 1 to 5%, 1 to 2%. So now we have a situation that 30-35% of the whiskey, if you force that condition, will evaporate. In addition to that, the inventory carrying cost in India, the cost of capital in India is 8 to 10% easily for any company. So you're looking at another cost pile-up happening. Why we think it's superfluous? Because there's enough medical evidence or scientific evidence that the same effect that you achieve in Scotland in 3 years' time can be achieved in India is 9 to 12 months' time. Because of the climatic conditions, we are much warmer. So much warmer climate. So now we have a situation that most of our mainstream products are unable to go to the UK markets because of that condition. It will not be accepted as whiskey. So that severely limits our ability to export. And till the time this matter is addressed, and this is one of our major demands.
Yeah, so 3 years be brought down to what?
So we say, ideally, there should be nothing. Countries like US and all have no such law. Most of the world has no such laws. As long as there is no misleading declaration on the label. But in case if they wish, it can be 1 year's time, because that will be the parity. But most of the world does not have any such law. It's only the Commonwealth countries. Basically, it's UK, Canada, Australia, New Zealand. They have this law.
Got it. And that's the major big demand, right? To basically, which allows access to the UK market for you to be able to export.
Yeah. In absence of that, I'm afraid that Indian industry will not have much to benefit out of this.
Got it, sir. We are out of time, but we could have probably touched upon a few other topics. But this is something which we will come back to, I'm sure, as we kind of go into the end of the month, and hopefully that FTA is sort of agreed upon, and some of these points are also taken up. Thank you very much, Ambassador Dasgupta, Mr. Giri. Appreciate you, both of you, joining in, and hope to have you back again as we continue to track this one. We'll take a quick commercial break. We are up 85 points right now. 19,816 is where the index is at. It's a very, very steady looking screen. 3:1 in terms of advances to decline, so nothing to really complain. It's a wrap on this edition of Bazaar. Chartbusters will take up all the action in just a bit from now.